Yo, 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 what's going on, man? Hey, you know who it is. CPA Strength, strongest CPA in the state of Florida, licensed CPA that is. What do you do over here, CPA Strength? What do you do? I teach the world accounting by the basics, building block by building block by building block. You know what I'm saying? If this happens to be your first time here, welcome. Hope to see you again. I got something for you to do. Check out this playlist right here. It is the best accounting playlist in the world, I guarantee that, and it's always evolving more and more every day. It's like a genie bottle. Rub it, dreams come true. Enough said about that. Let's get into today's action. What's today's action? This is my classic series. It's a class. Oh, I love a good classic series. This is my classic series, Accounting for Beginners. This is number 60. This is the 60th installment. It's right after 59, right before 61. It's so special. It's got its own video. Number 60, so special, it got its own video. What are we doing in number 60? We're doing accumulated depreciation. We're talking about accumulated depreciation. We're talking about what is it? Where does it show up in the balance sheet? What's the deal with it? What's it all about? I took a picture. I went on the internet and http:// Google search something. Let's go to my photos. So here's what I did. Now I'm gonna try to do a split screen of what I'm looking at on my phone here. You know, so this is just one of the first balance sheets that I came up across when I searched balance sheet in Google search. So you can search a balance sheet and try this out. Just search a balance sheet on Google and look, try to have a different one that's not this Blue Lagoon water resort park. I just want you to notice that on this one, on one that you pull up in all my examples and on every other example you will see, it's always going to be assets equal liabilities plus equity. Now let's zoom out. Now we're going to zoom into this. This is my mapping system. DCADLR, debit, credit, asset, draw, expense, liability, equity, revenue. If an asset is going up in value or increasing, it's going to be debit. If an asset is decreasing, it would be a credit. Accumulated depreciation is a contra asset. That's the first thing I have on my board. It's a contra asset. That's what you would need to remember, because you already know DCADLR because you've been writing that on your paper every day forever, and then you see something about accumulated depreciation, or make a journal entry with depreciation expense and you don't know what's going on, or you have a question about accumulated depreciation, you don't know what's going on. If you can remember, accumulated depreciation is a contra asset. You don't even have to remember it's called a contra asset. You can just remember that it's, see, the reason they call it contra asset is it's contrary to what normally happens. Normally you would have if it's increasing, you'd have a normal balance of an asset of a debit. Now with the contra asset, with accumulated depreciation, I think accumulated depreciation might be the only contra asset out there. I'm sure there's other ones, but it's the only one I can think of, and it's the most prevalent one. So the contra assets, contrary to the normal ones, it is a positive credit balance. But it's a contra asset, it's contrary to normal. It's a positive credit. It's a positive credit. It's a positive credit. See? Contra asset. Contra asset. Contra. What's that? For the 30 men on Contra, the game left, A, up, down, select B. Let's get back to this balance sheet here. Let's get back to this balance sheet. Now you notice in this balance sheet, look at the bottom, assets, $46,491,950, and that equals liabilities and equity, which is $46,491,950,000. So as you can see, Assets equal liabilities plus equity, and that is the balance sheet, and you can see that it equals. So that's one of the reasons DCAler is so handy, because it has the balance sheet in it. Assets equal liabilities plus equity. So I want you to see that equals, it's always going to equal, assets are always going to equal liabilities plus equity. Now let's look over on the asset side. Let's go to the asset side. It has current assets, under current assets. It has investments under that, property and equipment. Then under that, what property and equipment they have. I'll label my balance sheet fixed assets, and they have theirs property and equipment. Doesn't really, the difference is a small difference. Their land, building, furnishings, and equipment. Then after that, they have less accumulated depreciation. And they subtract that means less. They subtract the accumulated depreciation from the rest of the property equipment, and then they get net property equipment. So if you're looking at this in a glance, you can see the book value, or the net, the net value of the property, plant, and equipment, or the fixed assets. You can glance at it that they don't tally them up, but let's see. You would be able to see that the property equipment, was bought for 36 million. There is 4.5 million of accumulated depreciation. So the net's 32 million. So there's 32 million. Land is not depreciable, so you could subtract that by the net. So it's that 25 million more to depreciate on those assets. So I'm just saying, what I see on this balance sheet, and so that's accumulated depreciation when, it accompanies I just wanted to show you a balance sheet that you could find from anywhere. Enough of that. Let's really dig into accumulated depreciation. Read my board, right? And stay focused. So we already went over to Contra asset, blah blah blah. Yeah, it's Contra because it's a credit. It's a credit. It's in the credit for positive. What's the journal entry for accumulated depreciation? When are you going to see accumulated depreciation? When are you going to run along accumulated depreciation? Let's think about what accumulated depreciation is. It's depreciation that accumulates. You have depreciation from 1 year, depreciation expense. It's in your accumulated depreciation pile. You have depreciation expense in another year, and it goes in the accumulation pile. Every depreciation expense goes over to accumulated depreciation as well. And it accumulates. It keeps going up and up and up every year. The journal entry. I believe unless you have some corrective 99.9 of your, I'm gonna go out on a limb here, and if I'm wrong, let me know if you can think of an occurrence, not a correction or whatever, but this is gonna be your journal entry. If you have depreciation or accumulated depreciation and you don't know anything, this is gonna be the journal entry. You're gonna debit depreciation expense. So let's see. So in this one you have debit depreciation expense 1,000, credit accumulated depreciation of 1,000. That's going to be the journal entry. You're going to have a debit depreciation expense, credit accumulated depreciation. Why is it like that? Because you are expensing the asset via depreciation expense. I'm going to answer an unknown number. They're going to be out of their mind. So this would be the journal entry for accumulated depreciation. So if you can't remember the journal entry, or it's a Contra asset, I want you to think about. So I just showed you the balance sheet before. So I want you to think about what it's doing, what accumulated depreciation is doing. So I have just a balance sheet here, 12/31/16. Assets. I have under assets. I have fixed assets. Under the fixed assets, I have a truck for $5,000. So I know if I see that on the balance sheet, I know assets are on the balance sheet. I know balance sheets, assets equal liabilities plus equity. If I see that, I know it's 5,000. I know it was worth $5,000 when it was purchased. That was the purchase price. Then I'd see accumulated depreciation minus $2,000 on the balance sheet. So and I'd have total fixed assets of $3,000. And you say, whoa, time out, time out, time out. You thought you got me on something, right? You're like, here, this journal entry is only for $1,000. Yeah, but this was for this year. This was a 2016 journal entry, right? For $1,000. So now, if on the balance sheet it has $2,000 to accumulate depreciation, so this is why the balance sheet's on top, but you'd be thinking that there was probably, you know, this truck was not bought during this year because the depreciation expense this year was $1,000, because you'd look right under the balance sheet, the income statement, see what was the depreciation expense for this year. It was only $1,000. Why is accumulated depreciation $2,000? Well, they had $1,000 from a prior year, so it accumulates, so it's totaled to $2,000. Okay, so the truck has $3,000 left of depreciation. It's probably got a couple more years of depreciation left. So you can glean all that or whatever from looking at the balance sheet for a couple seconds. And that's kind of why it's done like that. Now, to have a negative on the balance, to have a negative amount on the balance sheet for assets is a rarity. Alrighty then, I also want to tell you that, see, I already told you over here, depreciation expense and accumulated depreciation are like, they're like biffles, they're like best friends forever, forever. They're always together. I don't think you're going to see one without the other. Ever. They're biffles. They're always going to be in journal entries together. Now this was the definition in the book. Accumulated depreciation is the Contra asset account credited when recording the depreciation of a fixed asset. That's the definition of the book. I was trying to make this a short one. It went really long again. It's all about accumulated depreciation. Thank you for watching. This is going to be the end of the video. I hope to see you for the next one in 61. If you liked it, please like, share, subscribe, share this accounting knowledge with other people. Don't be stingy, man. Don't be stingy. Try to stay positive. Don't be a hater. Until the next time, let's go.